Hello and welcome to the BWC Crypto Podcast. This is where you get insightful information on anything you need to know about crypto trading. Whether you're a beginner in trading or you're a continuing trader, you're going to get all the information that you need here. So make sure you have subscribed to this channel and also share this channel with your friends so that we can educate the world. Those who have been following this channel, we know we had a topic where we discussed real estate versus crypto. In our previous episode, we talked about liquidity, we talked about ROI, and also we did a general difference between real estate and crypto. On today's episode, we're going to look at the risks, we're going to look at volatility, the future outlook of real estate and crypto. Before I continue further, I have with me two guests who are going to introduce themselves, and then we are going to dive into the topic. I am your host, Masingige. Karibuni sana. We'll
Thank you so
start
much.
with you.
All right, so what's up, my people? My name is Alex Moredi, and I'm the director at Brainship Concepts, a seasoned crypto trader, trainer, and at the same time, an investor. So good to have you on this podcast. I hope you enjoy the show.
Thank you, Mas, for the welcome. So I'm John Magara. I'm a crypto trader and a crypto coach at Brains Concept. So welcome to our podcast for today.
Thank you so much for coming. In every investment, it doesn't lack a risk. Once you invest in something, you obviously know you'll either lose or gain. So when it comes to crypto and real estate, what is the risk of cryptocurrency compared to that of real estate?
Okay, so comparing between Bitcoin and maybe Bitcoin, you can say maybe generally crypto and maybe the real estate. You can say for crypto is usually it's high risk, high potential. So it usually depends on the like for someone who wants to maybe make a decision whether to go for real estate or maybe to go for crypto, usually about more about diversification. So you can either allocate some assets maybe for real estate, then allocate some assets for Bitcoin. Because for Bitcoin is because it's a high risk, high potential. You can also make some gains out of it. Also, on real estate, it's a low risk, but at least there's consistency in what you are making. Maybe the profits, maybe either maybe monthly or maybe yearly. Yeah.
So for me, I think when it comes to the crypto market in terms of the risk, I'm considering two things when we're talking about the risk in crypto. The first one is liquidation. So this means that in crypto assets, in your crypto, you can get easily liquidated in your crypto assets. This means that liquidation basically means like you can get wiped out. So you wake up, you have $1,000 in terms of crypto assets, but tomorrow you may find they have been wiped out, and this occurs mostly actually when you're trading the what is it the futures? Yeah, the futures. Now that is the first thing when talking about getting liquidated. So in real estate, actually it's very hard to get liquidated in real estate because I think land will always remain there, not unless now you have been scammed or something like that has happened. Now it means you lose your land, but liquidation is very minimal when it comes to real estate. Now, the second risk in the crypto market, when comparing the crypto market versus the real estate, is volatility. Now, crypto market is a highly volatile market. This means that price can be $10 today, tomorrow can be $100, and after the day after tomorrow can be $5. So this means that the fluctuation in price is very irregular, especially in some crypto assets that are yet to gain some good traction, or people have not gained confidence in those particular projects. Whereas now in real estate, when we're talking about volatility, it's very little. Hardly will you find that shamba imefika 5 million and then ishuke ikue 4 million ama ikue maybe 2 million. So the real estate offers a more stable pricing, but now in terms of returns, it's low. But in crypto market, it's gonna offer you that big volatility and price fluctuations, but in the long run you will end up benefiting. It's high, it has high potential. Those are my two definitions when it comes to the risk in the crypto versus the real estate.
Okay, we have market sentiments, government regulations, and global events affecting major investment plans. So,
Yeah.
how do these factors affect crypto and real estate?
Now let's talk about something like you said the first one: government regulation and taxation. For instance, we have to recognize that the crypto market is still a gray area for what? For the government regulation and taxation. Most governments actually right now ndio wako ile in the initial stages. Unajua the government again and the central banks, they are led by the old school moneyed guys. So for them, when you tell about crypto, they actually will run away or they call the police for you. So like we still in the initial stages of regulation, initial stages of making sure that you have proper tax laws on the what, on the crypto market. Very few governments, let's say not more than 5% actually, have embraced the crypto market into the government structures. Like you can go and pay for a product or an asset using crypto, like kwa records, like this guy is also paying tax tagged on this transaction of the crypto market. So it's still on the initial stages. But on the other end now, on the no, you see, such now, if for instance the government today, Kenya, is a crypto is being accepted as a means of payment in the Kenyan market, then it means that more people will be able to acquire that particular asset. Because if you check and see, most people actually don't trust the crypto market because it's a one unregulated market, and number two, it's the tax regulations are also, it's also gray. People even don't, the government doesn't understand so much what is crypto, what is Bitcoin, and everything. But if there is more adoption by the government, then it means that there will be rules and regulations. It will be also a safe environment or safe haven for even big investors and big corporations to jump into the crypto market, just like the real estate.
Anything to add on that?
Yeah, basically, you will find like maybe in some countries, maybe these regulations come into place because they want to protect investors. They want to create a very conducive environment for investors. So, like, they don't want to bring a project whereby investors are maybe investing within a range of 1 year. People are losing maybe their money when they want to invest. So regulation are usually there to just keep a very conducive environment. And so if all the assessment is done, maybe they assess on the crypto, they find that if someone is trading on crypto, it's a very good venture. Maybe there's no much loss when maybe someone is investing. Now they can even pass laws. Maybe they can even start accepting maybe even the crypto as a payment method for, or maybe if they find the environment for trading or for investors is not conducive, they can decide to ban the use of even the crypto on that specific country, or maybe.
Yeah, sure. Yeah. So basically, what we are saying is that when you have those tax laws and regulations in place, then the crypto environment also becomes a safe environment for investors. Yeah.
Okay. Real estate is a heavily regulated investment. Are there any regulatory challenges that or concerns in the crypto investment?
Maybe Alex. Okay, when it comes to crypto markets, so there are some challenges in regulating crypto, because number one, by the law of nature of the crypto market is that the crypto market is highly decentralized. So it therefore means that the government cannot be able to control who owns a crypto, whom do you send to, and so on and so forth. Like they cannot be able to put some, there are some measures that cannot really be put. And also in the nature of even transactions, for instance, regulating, for instance, you can send somebody, once crypto transactions are actually irreversible. So if you send somebody money and probably they are irreversible, at the same time the crypto transactions are anonymous. So so for instance, when you go and buy Bitcoin from somebody there, you may not be able to really actually know, and then unless now you're using these local payments, that probably you can get their number, maybe amekutumia pesa mahali fulani, But when it's on the blockchain alone, like crypto to crypto, you cannot be able to know the other person at the other end. So therefore, this remains a very great challenge because, for instance, you umetumia mtu BTC and then maybe haja deliver product or something like that. How is that person being able to be traced and so on and so forth? So those are some of by the fact that the crypto market is highly decentralized. It has anonymity, and at the same time, which is the other thing that I've said, anonymity, and also the transaction are irreversible. Those are some of the characters, or rather characteristics, that make that market high, like inakuwa na challenge kuwa regulated.
Also, the challenge part is this thing about maybe knowledge base and skills. Feel like a continent like Africa, crypto is almost very new, very young. So many people they don't know much about. So when it comes to investment, when someone hears about this thing I'm going to trade only, knows that this is just a scam. Even if you try to convince him he will tell no, this one. So even most of the governments, they are just locked in that because there's no much knowledge about that crypto. So it will be a challenge for the crypto to grow on that use on that country, maybe in that country. You see, like the challenge that we had late of the world coin being adapted in Kenya. So many people started saying maybe scanning of the eyes and everything. You see, but it's not it was not just about, it's just like any other coin, like just Bitcoin. The way it started, the scanning of the eyes and everything was just a story that starts and then it develops of the internet. Then people just decide to pump it and then pass certain rules and regulations on that. It's also a very major challenge when trying to grow these crypto markets. Yeah.
Tuliambiwa ukienda kuscan macho umeingia Illuminati. So crypto is a digital asset while real estate is a physical asset. What is the difference in owning both?
The difference in owning both, I think let's talk about something like accessibility on the global reach. So for instance, Bitcoin sahi unaweza nunua Bitcoin kwa msemo mwenye yako US. So it therefore means it's very easy for you. When you get into the exchange, you can buy Bitcoin. So it means that the global reach of the crypto assets is easy in terms of acquisition. Now, on the other end, real estate, in terms of acquisition, I'm betting like you have to familiarize yourself with so many things, local rules, taxations, and everything of a certain country before you even acquire property from that country. For instance, you cannot just go and send money and you're buying a land in the US, even locally, actually. You have to do a lot of groundwork before you even purchase that particular land. So in terms of global reach and accessibility, crypto, or rather the crypto assets, very easy. In terms of real estate, very hard, or rather requires a lot of time and research. And again, I think we can also talk about the amount that you can start with. So in crypto assets, you can start with a few dollars, like even $10, $50. You can be able to buy some crypto assets. But sasa shamba nayo hata kama ni zile maguta ama ni zile zingine like lazima ukuwe na kamfuko kakiwa kazito kidogo. Na ukiona pia shamba ikiwa that cheap, then it means that place, it's gonna take a lot of time before that place becomes valuable. So hiyo entry ya crypto iko very easy, unlike real estate. Unapata hiyo inahitaji pesa.
So touching on the point of liquidation, now the process that the ability for you to buy and sell, when it comes to comparing the real estate and maybe crypto, usually it's easier to liquidate crypto than. So unajua kupata mtu like huwezi post shamba saa hii, unataka kuuza shamba saa hii na upate client maybe kesho. It can take you like maybe 1 month, even 6 months, something like even 1 year. And also there's these things of middlemen are coming along the way. For crypto, if someone has assets, his assets, he can decide to sell his assets in the next 30 minutes. Utapata asha liquidate his assets na amepata the cash kama alikuwa anataka kufanyia maybe shughuli fulani kama alikuwa amefanyika kitu hiyo. In form of liquidation, it's easier selling to sell off the crypto more than the real estate. Yeah.
Okay. From your own experience, what is more rewarding, investing in crypto or investing in real estate?
For me, I will prefer, me personally, I will prefer diversification among these two because all of them are promising. So, like if I diversify, because for crypto, I know it is high risk, high potential. This one is low risk. At least you will get at least constant profit. If it's on real estate, you will know at least some percentage at the end of the month, maybe, or maybe at the end of the year. Yeah, so I usually call for diversification. You maybe diversify and put some investments in crypto, then some investments in real estate. You can decide, maybe depending on the percentage, you can put a higher percentage on real estates, maybe a lower percentage on crypto, or vice versa. Yeah, any of it, depending on your long-term goals. Again, it all depends. There is someone who can just go full in crypto, another one go full in real estates without considering the two. Just depends. Yeah.
You want to hear my opinion?
Yes.
So for me, as a digital entrepreneur who is seasoned in the also crypto space and the forex space, I will always go for for the crypto assets. Actually, part of what I have done, what I've managed to do is also because of courtesy. Like I can target to also trading in the crypto market. So, but now as an experienced trader, also I also have to tell the public that it's always good to balance your portfolio also based on your risk appetite and such, and also accessibility of money. There is so many ways to approach it. Actually, you can even buy land, put up the rentals, and then you say out of these income your rentals and your napata, you can pump it to crypto. Or you can do the other way, vice versa. You can buy crypto assets with your own money, that you can go all in, depend with the money that you have, and out of the crypto profit that you reap from the crypto market, you can pump in on real estate. So there is always a way to navigate around it. So it depends on also mahali uko. Unajua pia kama wewe umetoka kwa rich family ama Kenyatta family na uko na shamba mingi, utaenda sasa kununua shamba ingine ya nini? Maybe utaenda kwa hii side ingine ya Bitcoin. So ina depend pia position ya msee yako, but always do your wise decision. So yeah.
Okay, thank you so much for honoring the invite. Thank you for those who have watched this episode. Make sure you have subscribed to this channel because we have more topics that we are going to discuss. And if you have a topic that you feel you want us to tackle, feel free to write it on our comment section, and for sure we are going to discuss it here on this podcast. Stay safe and trade smart. Till next time, bye-bye.